All right, so we're back. We'll take this time. Um, if anybody has any questions or anything of that nature that they have for me, just go ahead and raise your hand, and I'll unmute you so you can ask any questions that you may have, or you can go ahead and um, ask your questions in the question portion. All right. All right, so let's go ahead and get started. All right, so now that we have John done, let's go ahead and move on to our next return that I've gone ahead and put in the information already. And here we have a couple that's married finally jointly with their two children. With two children, we have John and Jane Doe, and two kids, Jimmy and Jamie Doe. Um, and here what we're going to do is show you how to add information for each taxpayer and spouse separately. Now I'm going to show you why this is a really great feature on the software. So let's go ahead and add some forms. Go here to add form. We'll add a W-2. Now if you notice, it's asking me if it's the taxpayer's W-2 or the spouse's W-2. So let's go ahead and choose the taxpayer. And you're going to see it automatically populates his information. So now when I go ahead and put in the employer's identification number, you're going to see how that database has already begun to build itself. So when I put in the number 2, it's going to automatically ask me if it is the same as a previous EIN number that I have put in. So let's just say it is. And then it's going to automatically populate that corporation or that employer that I put in previously. So now let's go ahead and add some wages. And your withholdings. Okay. Now we're going to go ahead and add the spouse's W-2. And you're going to go ahead and select the spouse. Double click on that. All right, and now we have our W-2. Okay, so let's say that John and Jane have a couple of expenses. All right, so we're going to go ahead and start our secondary forms. Okay. Okay, we'll add, let's say, a Schedule A. So all we have to type is the letter A, and it's going to automatically take us to our Schedule A. Or again, we can come over here if we don't forget the name of the form, we can just put in our itemized deductions, and it's going to show up right here on Schedule A. Okay, so let's go ahead and add Schedule A. Okay, itemized deductions. All right, so let's go ahead and put in some expenses. So we're going to come down here. Here it's going to show you the usual information that you have. If you have any mileage that you want to go ahead and deduct for medical expenses, long-term care premiums for the taxpayer or the spouse, or just if you just want to go ahead and put the total medical expenses for the year, you can go ahead and plug that in. Now, we all know that it has to exceed 10% of the AGI, which in this case, since AGI is $50,000, would be $5,000. So if we go ahead and plug in $5,500 in total medical expenses, it's going to automatically do that calculation and show us that calculation right here, showing the 10% of the AGI and the allowable medical expenses. Okay, and then here we have our sales tax that's automatically calculated by the software based on the AGI. But if they maybe had purchased some big ticket items such as a vehicle or anything of that sort, we can go ahead and double click on that, and we're going to have a worksheet that comes up. All right, and here towards the bottom, you're going to see here general sales tax paid on large purchases, if any. We'll go ahead and click on that, and this is a nice time to show you guys the calculator tool. So let's say they purchased a vehicle for $35,000. So we're going to come up here to our calculator tool, and we're going to plug in 35,000. All right, times, let's say they had a 7% sales tax. Okay, and that's going to give us our sales tax that they paid. We can just go ahead and insert it directly into that field. So we'll go ahead and close out of that. And now it's added the calculated sales tax along with the big ticket item, the purchase for the sales tax on that big ticket item that they went ahead and purchased that year. And then, of course, you have your real estate taxes, personal property taxes, or foreign taxes that they may have paid, or any other taxes. Then you've got your interest. The most common is the first one, the home mortgage interest, which you can plug in for the first or the second mortgage. If they purchased a house that year, then they can report the points, okay, that were reported on that closing. If they have mortgage insurance premiums, that you can also go ahead and plug in right here. If they have mortgage interest, let's say maybe from a private lender that was not reported on a Form 1098, you can go ahead and put in the name and address of that lender along with their EIN number, and go ahead and plug in the amount that they paid right in this section as well. So it does address most all scenarios that you may come across during the tax season. Gifts to charity. They have any charitable contributions, you can go ahead and plug them in here. Okay, and then I want you guys to really focus on the job expenses, line 21. Now, this is a really useful tool because if you notice, it's got the usuals: union dues, educator expenses, uniforms, tools, cell phone, which is now included on there, and a couple of other ones if they have any other expenses such as dry cleaning or office supplies, things of that nature that weren't reimbursed to them. Now, by double clicking here, it's going to give you a lot of other options. So you can put in as many of these as you want. There's a lot of different fields here that you can go ahead and fill in. Now, you're going to notice we're going to have a description here. So let's say they had some automobile expenses, okay, in the amount of $845. Now, you notice there's going to be another little box here, okay? Now, here, it's going to ask you if it's the taxpayer or the spouse. And I'll show you why that's important now. So we're going to say that's the taxpayer. Then we had some automobile expenses, okay, for the spouse. We had some dry cleaning, all right, in the amount of 908. That was also to the spouse. And let's say we had some computer expenses for the taxpayer. Now, this is important because of this feature that I want to show you guys right now. This feature is probably one that's going to save you a really large amount of time in the preparation process, because lo and behold, After we're done with the entire return, we're good to go. We ask the client to sign. That awful question comes up where they ask if they're going to get more if they file jointly or if they file separately. So most softwares will require you to close out of the return and start 2 brand new returns and take 3 times as much time and effort just to get that one tax return done. That is not the case with our software. So let's go ahead and save here. If you notice here, there's an asterisk next to their name. This means that this return has not yet been saved. The changes that we have done on this return since we last opened it have not been changed. So let's go ahead and save it now. And you'll notice that that goes away. So that's a good way to tell if you've saved the changes. So we'll go ahead and save. Now, here is where we're going to save you guys a lot of time and effort. We're going to come up here to return. And we're going to come down all the way in the bottom. It's the last one because it's probably the last question that we want to hear. Right down here, split tax return. So if this question does come up, all we have to do is go ahead and click on split tax return. And it's going to ask you if you want to split it so that both of them are single, which if you have returning clients and let's say they had a separation or a divorce decree that was issued, you can simply carry forward their joint return and then split the return so that you don't have to go through and input the return again twice. Or married filing separately, which would fall under the scenario that we just mentioned now. So let's go ahead and do that. All right, so now it's letting us know the tax return has been split, and the lookup screen will now show 2 new tax returns. Okay, so let's go ahead and close out of here. And now if we notice when we search, we now have 3 John and Jane Does. Okay, one of them which is joint, and the other 2 which are married filing separately. So we have Jane here and John here. So if we look, John and Jane are getting 4634 jointly. If we come over here, we'll see how much Jane is going to get. Now this is automatically going to add both of the dependents, okay, to each return. Let's come over here to John, and we'll see how much he's going to get, 3802. It's because we both have the exact same amount in that W-2, but also John is going to have both dependents. So at that time you would ask them who will be claiming which dependent, if one of them will be claiming both, if they'll go one each, however they want to go ahead and go about that, if there's anything in the divorce decree that stipulates that, or if they just want to go ahead and split the dependents. So this is a very useful tool. It's going to save you guys a lot of time and a lot of effort. And of course, we know that saving time and saving that effort is going to save you guys a lot of money also. So let's go ahead and continue on with our joint return. Just want to show you guys that neat little feature that the software has. All right, so we have our Schedule A. All right, now we'll show you guys how to do another very common form, which is our Schedule C. So we'll just go ahead and type in C, the letter C, and we have our Schedule C. We'll say that that John has a part-time business here. Let's say he does cleaning. Okay, and business codes for a lot of software is very time consuming. Very time consuming because you have to go and you have to look up the individual business codes, and that takes some time. For the most part, we know a lot of them generally by heart, or we have some kind of a cheat sheet. The software itself provides a cheat sheet for you. You just come right down here to our active window, and if we hit choices, we have all of our business codes here. Now, this is very useful, but if you're like me, that I really prefer not to have to read through all of this, you can just put in a general description right here, and it will pull up the business code. So let's say that he has a cleaning company that provides janitorial services. So we'll go ahead and put in that description, and it's automatically going to pull up that business code. So that's true for most all business codes. You can just put in the description of the business code and it will automatically populate there. All right, so he has a sole proprietorship. He's not incorporated. If he had an LLC or a DBA, something of that nature, you can go ahead and put that information in here for the name of the business as well as the EIN number or the employer ID. And we're just going to say that the business address is the same as his personal address, and we'll just carry that forward. All right, so he is on a cash basis. All right, and then now we're going to go ahead and get started. So he made about $5,000 with his business. Okay, and he had about $300 in supplies, about $150 for some business cards and flyers, and now we're done. Now, this is where I want to show you guys a little something about depreciation. Okay, now there's a couple of different ways to do depreciation. I'll show you guys the shortcut first, and then I'll show you guys the actual way to do the depreciation. All right, so let's say he has a vehicle that he uses for his janitorial services. So we're going to come down here to information on your vehicle. We're going to select that so we can carry that forward to the automobile expenses, right here, car and truck expenses portion. Okay, and now we're going to go ahead and put when the vehicle was put into service, which was January 1st of 2014. And it's going to ask us total business miles. So we're going to say he drove 2,000 miles. Okay, and he commuted 1,000. And other personal use of the car, he had about 550 miles. Okay, now it's going to ask you a couple of questions here. If it was available during off-duty hours, we'll say yes. Do you have another vehicle for personal use? We'll say no. Do you have evidence to support your deduction? Absolutely. And is the evidence written? Yes. Okay, so now if we notice, it's automatically put in, based on the mileage rate, the amount that he can deduct for the car and truck expenses. Okay, now again, this is the shortcut. This is the shortcut that you can use for writing off the miles for the automobile expenses and the business use of the automobile. Now I'll show you guys the correct way, or the other way that we can do this using depreciation. Let's go ahead and just delete all this. Okay, and before I do that, I'm going to go ahead and add another form that's very commonly seen during tax season. That's your Schedule E for your rental properties. Okay, so let's say that John and Jane have a rental property over on TSG Lane. Okay, this is a single family residence and they've rented it for the entire year. All right, right here this is asking personal use days, if any. You say no. Okay, and then here it's going to ask you for the amount of rents that they received. Let's say it was $12,000. Okay, and then we have some expenses here. So let's say they had to pay the realtor some commission, 1 month's rent to rent that out. They've got some association fees. We can put it under the management fees. Okay, for property management. Let's say it's $100 a month, so that's $1,200 for the year. They did have to do a couple of repairs on the property, about $350 worth. Okay, and then from here, we're going to go ahead and start off with our depreciation. Now, depreciation can be done one of two ways. This year, we've made it much easier by just adding it here onto the attached forms window. You can just go ahead and double click on that. Okay, or we can hit Control and N as in Nancy, and that same window will come up. But again, this year we've made it much easier. You can just come right over here to the attached forms window and select depreciation. And from here, there's really only two kinds of depreciation with taxes. There's two kinds of depreciation simply because there is vehicles and everything else. Now, the reason I say that is because a vehicle, if you're putting depreciation on a vehicle, you can add that depreciation for the same vehicle to different forms. So in this case, we have our Schedule C and our Schedule E. So let's go ahead and add our Honda onto the depreciation. Okay, and it's a gas-powered automobile under 6,000 pounds. That was placed into service January 1st of last year. Okay, now we're going to go ahead and put in the cost basis. Okay, for the vehicle, say it was $18,000. Okay, and then we have to answer these questions before we can go forward. Otherwise, we'll get this error here. Please answer all vehicle questions before continuing. So, well, this is similar to the ones that we filled out over on the Schedule C. Was it available for personal use? Say yes. Was it used by more than 5%? Yes. Was another vehicle available for personal use? We'll say no. Do you own this vehicle? We'll say yes. Now here it's going to ask you if you want to force the actual expenses. What the software is going to do is it's going to calculate the depreciation and then calculate the actual expenses for that vehicle, and it will add whichever is higher. So we're going to go ahead and put no for that. All right. Now it should let us through. We got to finish answering those questions. Put no for any kind of forced questions. All right. And then we'll go ahead and go through. Now it's going to ask us the total vehicle mileage. Okay, so let's say we put 10,000 miles on that vehicle. Okay, then it's going to ask us our total commuting mileage. So we'll say we commuted, of those 10,000, we commuted 2,000 of them. All right. Now, as I mentioned before, when you add a vehicle depreciation, it's going to allow you to put it on multiple forms. So here we have our Schedule C for our cleaning, and we have our rental property over in Tsg lane. So it's going to ask us how many miles we use that vehicle for cleaning, how many miles we use that vehicle for the rental property. So let's say for the cleaning services we used it 5,000 miles, and for the rental property it's in Tennessee, so we went 5,000 miles on that as well to go do repairs and pick up the rent. Now this is going to prompt you with an error. Okay, anytime that you see this error, okay, total mileage amount entered is less than business miles plus commuting miles. If this is an invalid asset, please delete. The reason it's going to give you this error is because the total vehicle miles is 10,000. Commuting miles is 2,000. So really business use of this vehicle was only 8,000 miles. If we put anything over that on here, it's going to prompt us with that error. So if you ever see that error, remember that it's total miles minus commuting miles equals what this can total up here. So let's go ahead and change that now and correct that. So now we got 8,000 miles. Now we have our actual expenses. Okay, this is what that question was about, if you want to force the actual expenses versus the depreciation. So let's say we spent $600 on gas, parking fees and tolls, we spent about $700 on that. And now we can go ahead and see how the depreciation adds up. Okay, so let's go ahead and close this. All right, we'll go ahead and close this. And we'll close this. Now let's see how that depreciation comes up. Okay, so now you see that we have our depreciation on our Schedule C for the auto and truck expenses. And we come over here to our Schedule E, and now we have our travel expenses, total automobile and travel expenses. And that automatically populates on there as well. All right, so now that we've done our vehicle depreciation, let's go ahead and do everything else. All right, so again, if you want to go into a vehicle depreciation or vehicle allocation, you go ahead and choose that. But in this case, what we're going to do is depreciate the actual rental property itself. So we're going to select our Schedule E with our rental property. We're going to add our new asset. So now we're going to come down here. Let's name our asset. And we're going to come down here. We're going to look for the description that best matches that asset, which would be residential rental property. And you do have many options, all of them with the depreciation schedules already built in, so you don't have to worry about that. Just select the correct description of the asset, and it's just going to automatically calculate all of that for you. All right, so that's our rental property, and let's say it costs $150,000, and we purchased that January 1st of last year as well. Okay, so now we have that done. All we have to do is go ahead and hit close. And close that out. Close that out as well. And now you're going to see that our depreciation automatically comes up. As I mentioned before, this, in my eyes, has to be hands down the easiest method for calculating depreciation out of any software that's out there on the market right now. And I can definitely say that with confidence because it's that simple. Come over here with depreciation. It's either a vehicle or anything else. So we've already seen how to go ahead and add the vehicle. If you have multiple vehicles, you can add a new asset, and it's the same process. Okay. All right, and if you have anything else that you want to go ahead and add there, maybe some computers or supplies or machinery or anything like that you want to add to the cleaning services, you can add that as well. So very easy way of adding depreciation and adding assets. As long as you're associated with some kind of business, you just assign them to the proper schedules. You may have more than one Schedule C. You may have more than one Schedule E, and all you have to do is go ahead and add those assets onto the appropriate schedules and go ahead and start that depreciation. So very simple, very clear-cut process. There are two different ways of doing it. You can do it through the depreciation screen, or as I showed you guys before, right through the Schedule C. Come on, scroll right down here and put the information on your vehicle there to calculate the mileage there. So very simple, very clear-cut process. If you guys have any questions on that, you can feel free to contact us over at technical support. But that's pretty much it. That's pretty much it for depreciation. Any questions on that, you guys can either raise your hands or you can shoot me a question over here on the question section there. I'll be more than happy to address those. Nope. All right. Right now I'm going to go ahead and go over a quick little overview of the way that the transmission process works. All right. So we have what's called our central site. Okay. Our central site is the point where all the returns transmit to before they get sent over to the IRS. Now we do that just to make sure and we verify for any kind of errors before it goes out to the IRS. If there is any kind of error on the IRS or on the actual return before it goes out, we'll notify you and send that return right back to you before it goes out to the IRS. And that's basically the main e-file system, the central site. Now we also have the master user, which is a collection point for all the tax returns filed by all of your offices. Each office, if they have a master user, is going to go to that master user. Now we always recommend that the master user be under lock and key, somewhere where there's not a lot of foot traffic, maybe in the owner's office or maybe in its own office, because that's basically where the data collection point for all of the feeder offices where all those transmit to. Then you have your transmit office. That's the office that actually transmits the returns to the IRS. So if you have multiple offices, let's say you have a couple of offices that you don't want necessarily sending the returns off to the IRS, they'll send them over to the transmitter office, and then the transmitter office can review them and then send them off to the IRS after they've been reviewed. Then you have you have a feeder office, which I mentioned a minute ago. A feeder office is just that. A feeder office is an office that transmits the returns to the master office, the master user, before they go out to the IRS. So if you have a feeder office, when they transmit, they're not transmitting to the IRS, they're transmitting to the master user. And when they transmit to the master user has the option to then send them out or review them and send them out themselves, make any kind of corrections. Now, the good thing about TSG is that we have a lot of different ways that you can set up your operation. If you have multiple offices, you can let us know how you would like to set that up. If you want to set them up as feeder offices or as independent offices that will transmit directly to the IRS. And we can go ahead and customize that process for you. So that's a nice little side note there. If you guys have a way that you want to set up your offices, you can speak to us over at tech support, or you can refer back to your account executive, and they'll give you a little bit more information on that. Relay that information over to us, and then we'll get you guys set up on that. Right now, what I want to show you guys is the reports. Okay. With this program, with TSC, you're going to have the ability to run the reports across all offices or sites, and analyze how each individual office is doing, or just to see how your office itself is doing if you have a single office. And I'll show you some of those right now. Now, I don't have that much in the system right now, but I'll show you guys how you can go ahead and build those reports. What we're going to do is start off from the work in progress screen, and we're going to come up here to lookup. And then we're going to come over here to extended lookup. And here we have our reports. Now, as I mentioned before, if you can enter information on any field, it can be used to build a report. So in this window, we have our display fields and our search fields. Now, the search field is what the criteria that you're going to put for the system to actually look up anything matching that search field. And then the display field is what's going to actually be displayed on that report. So we have a couple of reports that are already built into the system. For example, customers with Schedule C, or fee payments, which is a great report so you can reconcile at the end of the day or at the end of the season. Your fees that were paid, returns that were acknowledged already, no fee payments, over-the-counter payments. So there's a lot of useful tools on this. Now, let's say we want to see all the customers that have a Schedule C. We'll go ahead and load that report. And if you notice, the only search criteria is if there's a Schedule C attached to the return, it's going to pop up. And what's going to be displayed on those returns that populate is the taxpayer's first name, last name, social, home phone number, date of birth, and the attached form, which is a Schedule C. Now, let's say I also want to display the cell phone number for the taxpayer, because maybe I want to get all my Schedule Cs and send them out a mass text message. So I'm going to come down here and look for the taxpayer cell phone number. There it is, taxpayer cell phone number. We'll add that on there as well. So let's go ahead and hit OK. Now again, I don't have that many on here. I just have John Doe, which has his Schedule C on here. And again, this is what the display field is for. It's going to display first, last, and social for the taxpayer, home phone number, date of birth, the attached form Schedule C, and the taxpayer's cell phone number. So from here, if I want to go ahead and send out a group text message, I can just hit send text, and I can go ahead and send out a text message to everyone at once, but it comes in as an individual text message to that taxpayer, to each of those taxpayers, and they can reply, and you'll be able to see all of those replies that they sent back. So let's say once next season you have all of your Schedule C clients and you want to just go ahead and remind them to bring in their income documentation to be able to reconstruct their income, you can go ahead and pull all of those up and send them out one mass text message which will save you a lot of time and a lot of effort when they come in to do those taxes. They already know what it is that they need to bring in. So this is a very useful tool, very nice tool here. So if we go ahead and look up another one, let's say we want to do the same thing. Let's say we want to look up customers with a Schedule E. You want to see everybody who's got a rental property. So what we're going to do is we're going to use this, right? And let's go ahead and remove the Schedule C. I'm right back down here to attach forms, and we're going to add attached forms, but this time we're going to ask everybody who had, let's see here, Schedule E on their return. Okay, now let's say we want to save this report because we're going to use it later on. Go ahead and hit save, and we'll name it Customers with Schedule E. And now we have that report saved for later use. And like I mentioned, these are just the ones that we've built into the software. You can customize this however you see fit. So you can search for the verification status, W-2 EIN code. If you want to see how many clients you have from a specific employer, maybe you want to market there a little bit more since you already have a lot of word of mouth that's going around there. You can add that, and then you can just go and plug in the EIN number for that employer, and all of those taxpayers will come up, will be searched, and then displayed using the display field. Now, maybe I really don't need their birth date, so I can remove that, but I do want their address because I want to send them out a mailer, so I can add that. And you can see just how simple it is to build these reports. And like I said, it's very, very flexible, much easier than most of the software, most of the different tax preparation softwares that I've seen out there, where it's kind of, where you're kept in this box. And if you try and go outside that box, it gets very, very convoluted. This is very simple, very one-dimensional. You have your display fields and you have your search fields. And from here, we can go ahead and customize any kind of reports that we wish. And here we have John Doe again with the Schedule E. Excuse me. So those are your reports. And you can export all of your reports on Excel. I don't have Excel installed on this machine, but you can export all of these reports and have a database of all of your reports so you can better analyze your business and help grow your business, see what you can do to help spread your name out there and get more clients. Maybe figure out different ways of advertising or referral program. So there's a lot of different ways that you can use this reporting on here. Hands down, I believe it's definitely the best reporting available on any software that we can get our hands on here. At this point,